Let's take a look at what's going on with Dogecoin today, guys. All right, so I'm on the 4-hour time frame right now on Dogecoin, and here's what I'm looking at. We have support, giving me this trend line right here. We're basically watching this uptrend right now. It's bouncing on that line, moving to the upside. I think if we break this trend line going to the downside, then it might start to get a little bit more bearish. If we can break, if I'm also looking at this Fibonacci retracement level at .248. If we break that going to the downside, then the next spot that I'd be looking at is .185. But so that's like the bearish scenario, right? But we could also hold support on here, and we haven't broken that support yet. Let's see if we can hold support and continue to move up. The other thing that I've been looking at is if we zoom out, I'm gonna go to the daily time frame, and I was looking at resistance, giving me this downtrend right here. Yesterday and today we've been testing it. These two candles, let me zoom in a little bit. These two candles, we've been testing that trend line. We actually broke above it a little bit yesterday, so we're testing that trend line going to the upside as well. I think if we could break that trend line decisively, then the next spots that we might be looking at are the next Fibonacci retracement levels going to the upside. The first one would be .294, and the second one would be .339. The third one, .394. Those are the targets that I'd be looking at going to the upside if we were able to break up. If we went up and then started having trouble down here and then started getting rejected, what I would do is probably watch the trend. If it broke the trend line, then I would probably take profits and set up another limit order right here. If it continues to move up and we break this trend line, then or break that Fibonacci retracement level right here, then the next Fibonacci retracement level that I'd be looking at is this one. How do I get these levels? When we have a big, huge run, we start having trouble, or we feel like this is the top, or we feel like it is topping out, should I say. Then we get the Fibonacci retracement tool, drag from the bottom to the top, and that gives me those levels that I was talking about. So yeah, they act as support and resistance. And right now it's the .248 has been acting as support lately. Came down, hit my target, filled my limit order. It looks like we're getting a bounce now. Let's see if we can continue this bounce and move up, break this trend line, start to move up, start to hit these targets again. Let's see if we could do that. Anyways, like I said at the beginning, we're also watching this bottom line though. So if we break that one, then we might not be heading up as much as we thought we did. And we get wicks going to the downside, you know what I mean? So it could be either way. Someone asked me if I do stop losses and stuff like that. No, I don't. I just buy and either buy and hold, or I buy and trade, and you know what I mean? Like right here, I bought this level right here. If it moves up and then starts heading down like I was talking about, then I'll probably trade that and try to get that limit order again. But if it moves up and it breaks that level, then I'll just hold this position. And yeah, I have a position. I mean, I bought right here, I bought right here, I bought right here. I've been dollar cost averaging. That's what these levels are for. So up here, I took profits and then started dollar cost averaging at those Fibonacci retracement levels. And like this one right here, I traded a couple times where I bought it, I sold it, bought it, sold it, bought it, and then I bought, and then I bought, you know what I mean? So it just really depends on what's going on. But yeah, I've been trying to accumulate ever since I took profit up here. So I think that about does it. Oh, one more thing. The daily time frame. This is the thing that I was watching in the last couple of videos. Sorry, I've been doing Microsoft training the last couple of days for work, and I haven't had a chance to do a video. Okay, so let's go ahead and let's take off the trend lines real quick. Because I already talked about them. You could set them up on TradingView on your own chart. But what we've been looking at is the 9 moving average right here. When we break below it, it gives us resistance and it pushes us to the downside. It's basically in a bearish position. When we break above it and head to the upside, then we get support on it and bounce up, or it's a better chance for us to bounce up, should I say. So when we're above it, it's a bullish signal, or a bullish excuse me, position to be in, as opposed to being under it. I was thinking about this last night. It's like being in a fight. You know what I mean? Like, do you want to be on the top, or do you want to be on the bottom getting punished, or doing, like, you know what I mean, or in control? So yeah, unless, I mean, let's say you're a wrestler and you don't have jujitsu, you know what I mean, and then you like, not good. Anyways, you know what I'm saying though. It's better to be on top going up than it is on the bottom getting pushed to the downside. Like I said, when we come into that moving average, it gives us resistance and pushes us down. When we're on top of it, we can actually get support on it. Okay, so 2 days ago at this candle, we tested it. We broke to the upside. This is when I first started watching it. I don't think I made a video yesterday. We broke above it, but we weren't able to stay above it. That candle actually closed below the 9 moving average, which was not ideal. We want to break above that 9 moving average and stay above it. The next day, we actually did break above that 9 moving average right here, and that's where we got that green candle. Now we're actually forming a red candle, but check out, we're still above that 9 moving average. This is still a better position than being below it, if that makes sense. Hopefully, I don't know. Yeah. And so, yeah, what I'm hoping for is that we can stay above the 9 moving average, which is sitting right around 0.253 approximately, maybe 0.25319. That's what I'm kind of seeing. But if we could stay above that, maybe we'll get support on it and start bouncing on it to the upside, as opposed to getting rejected on it to the downside. Do you see what I'm saying? So that's one thing that I've been really looking at. Let's see what happens on this candle right here. Are we gonna stay above the 9 moving average and start getting and hold support and move to the upside? Or are we gonna break through it and go down, and then maybe break this Fibonacci retracement level going to the downside either? I'm not promising that it's gonna move up, but I put my money down here, like I was talking about. I dollar cost average right here, right around this area. Look where we got support. Boom. Looks like we're holding support, at least for now. Let's see what happens. We have 9 hours and 7 minutes to see what happens as of recording this video with this candle. Things might change within an hour. I don't know. It looks like we're testing that support too, so we'll see what happens. It could have been just like a pop and then get pushed back down. Sometimes the moving average isn't perfect, so like, let me see if I can find an example. Like right here, kind of, although that wasn't perfect. We didn't really get support on it. We actually just kind of went down immediately. But sometimes it goes like in and out of the moving average. Like it goes on top, bottom, top, bottom, top, bottom kind of thing. And yeah, so it's not always perfect, but it is it is kind of one thing that we're looking at. So let's jump up to the bigger time frame, and see how. Okay, so I'm on the weekly right now, and see, this is another thing that I was talking about in the last couple of videos. Okay, so we have the 9 moving average, right? And then we broke above the 9 moving average on the weekly over here. Ever since then, we were getting support on it. Boom, bouncing to the upside. And that's what we're trying to do right here. We're actually trying to recreate this little thing right here. Let me zoom in and show you. Okay, so we broke above the 9 moving average right here, right? We got a nice green candle, and then we started coming back down and testing it. But look what happened right here. We got support on it. Boom. Got support on it at the next candle. These are weeks. Each one of these candles a whole week. So we came down, boom, tested it, came down, tested it, boom. Then we started to get to support, and we actually started to push to the upside. So it might take us a little bit of time for this to play out. I mean, while we're not in the same situation here, but this is the same thing right here was happening on the daily, if you kind of follow, or if you're following me. Okay, so here's another thing that I was looking at, and this is another thing that I talked about, or that I've been, whatever. We're looking at the 9 moving average right here, right? We broke above it in this area, and we pushed to the upside. In this area, we broke below it, and every time we are coming into contact with it, we're getting resistance on it. We're not able to close the weekly candles above that 9 moving average on this time frame, the weekly time frame. So okay, so like I was saying, we're kind of confused on the daily time frame. What's going on with the daily? We are getting support on it right now, but let's move up to the weekly. That's why I'm moving up to the weekly, is to get a better picture. So we're still under the 9 moving average on the weekly down here. And the other thing that I've been talking about is I want to see the 9 moving average come down. I wouldn't be surprised if we had to go sideways for a while and let the 9 moving average catch up to us. That way we can break through it going sideways as opposed to having to break through it going up. It's still possible that we can break through it going up. Like the analogy I like to use is it's like a roof right now on the weekly. On the daily over here, you can see that it came down and we're kind of breaking through it going sideways like a wall as opposed to having to break through it like a roof. That makes sense. Weekly time frame, daily time frame, daily time frame, just kind of trying to show you guys what I'm talking about. Hopefully it makes sense and you understand. Yeah, so that's basically what I'm looking at. I'm glad that I think it's still a good sign that we're above the daily 9 moving average. So let me know what you guys think, though. I have to jump into training here in a second. If you guys aren't subscribed, hit the subscribe button to follow along. Let's see if I'm right or I'm wrong. I've made some pretty decent calls, but we'll see. All right, if you guys like this video, hit the thumbs up. And if you want to watch the last video where I was talking about this 9 moving average, check it out right here. And if you're new to trading, check out this playlist right here. It'll help get you started with TradingView. All right, I'll see you guys in the next one.